$10 trillion. That's more than the economy of every country on Earth, except for two. And it's the amount of money managed by BlackRock. So when its CEO, Larry Fink, issues a stark warning, the world listens. He says capitalism is undergoing a fundamental reshaping. But what does that mean? Are we witnessing the end of business as we know it, or the start of something new? For the last 50 years, one idea has dominated business more than any other. In 1970, the economist Milton Friedman declared that the one and only social responsibility of a business is to increase its profits. This doctrine, known as shareholder primacy, became gospel. The CEO's job was simple: make money for the people who own the company stock. And for a while, it seemed to work. Corporate profits soared, and the stock market boomed. But this laser focus on short-term gains had a dark side. To maximize profits, companies cut costs wherever they could. That meant suppressing wages, even as productivity went up. It meant moving manufacturing overseas, hollowing out entire communities. And it meant treating the environment like a free dumping ground, ignoring the long-term consequences of pollution and carbon emissions. Shareholder primacy created immense wealth, but it concentrated that wealth at the very top, leaving many behind and pushing our planet to the brink. The engine of prosperity was also an engine of inequality and environmental destruction. But then, things started to change. The world woke up to a new kind of risk. For decades, the financial world saw climate change as a distant, abstract problem. But now, it's hitting the bottom line hard. Insurance companies are facing unprecedented payouts from wildfires, floods, and superstorms. They're jacking up premiums or pulling out of entire regions, making it impossible to get coverage in places like Florida and California. Climate risk is no longer a problem for future generations. It's a clear and present danger to today's balance sheets. And it's not just the weather. A new generation is entering the workforce and the marketplace with a completely different set of values. Gen Z doesn't just want a paycheck. They want to work for companies that align with their principles. They don't just want a product. They want to buy from brands that are making a positive impact. They're voting with their wallets and their resumes, and companies that ignore them do so at their own peril. On top of all this, there's a growing political backlash. Years of stagnant wages and rising inequality have fueled a wave of populism around the globe. People are angry, and they're demanding change. Politicians are responding with threats of higher taxes, stricter regulations, and antitrust breakups. The era of unchecked corporate power is facing a reckoning. Suddenly, just focusing on profit doesn't look so profitable anymore. The pressure cooker was about to blow. This is where Larry Fink's letter comes in. He argues that to prosper over time, every company must not only deliver financial performance but also show how it makes a positive contribution to society. This is the core of stakeholder capitalism. Instead of focusing only on shareholders, a company must consider the interests of all its stakeholders: its employees, its customers, its suppliers, the communities it operates in, and yes, the planet itself. The idea is that by taking care of all these groups, the company will create more sustainable, long-term value for everyone, including the shareholders. This isn't just a theory. We are seeing it play out in real time. Look at ExxonMobil. For years, the oil giant dismissed climate concerns and fought against environmental regulations. But in 2021, a tiny activist hedge fund managed to win 3 seats on its board, forcing the company to take climate change seriously. Contrast that with a company like Microsoft. Under Satya Nadella, it has pledged to become carbon negative by 2030 and has invested heavily in employee well-being and digital skills training. Or look at Patagonia, which literally made Earth its only shareholder, dedicating all its profits to fighting climate change. These companies understand that long-term profitability and social responsibility are not mutually exclusive. In fact, in the 21st century, they are one and the same. Of course, not everyone is buying it. This shift has triggered a fierce backlash. Critics, particularly in the US, have labeled it woke capitalism. They argue that companies should stay out of social and political issues and stick to business. They've launched campaigns against what they call ESG, environmental, social, and governance investing, claiming it's a left-wing plot to undermine free markets. Politicians have even passed laws to punish financial firms that consider climate risk or social factors in their investment decisions. There's also a legitimate concern about greenwashing, where companies make grand promises about sustainability but do very little to actually change their practices. They slap a green label on a product or run a feel-good ad campaign, all while continuing to pollute or exploit workers behind the scenes. This erodes trust and makes it harder for consumers and investors to tell which companies are genuinely committed to change and which are just paying lip service. The battle for the soul of capitalism is far from over. So, where does this leave us? Capitalism isn't dying, but it is being forced to evolve. The old model, built solely on maximizing short-term profit for shareholders, is no longer tenable. The risks, from climate change to social unrest, are simply too great. The new model, stakeholder capitalism, recognizes that a company's success is intrinsically linked to the well-being of its employees, customers, and the community. It's a shift from short-term greed to long-term value creation. But this transformation is messy and contested. The resistance from those who benefited from the old system is powerful. The danger of empty promises and greenwashing is real. This brings us to the fundamental question of our time. Can capitalism regulate itself? Can companies be trusted to police their own behavior and truly serve the interests of all stakeholders? Or will we need governments to step in with stronger rules and regulations to ensure that the pursuit of profit doesn't come at the expense of people and the planet? The decisions we make now will define the future of our economy and our world. Thank you for watching. If you found this analysis insightful, be sure to like this video and subscribe for more deep dives into the forces shaping our world. Let me know your thoughts in the comments below.